Good afternoon and good morning to those of you on the West Coast. My name is Craig Saperstein. I'm a partner at the Pillsbury Law Firm, and Pillsbury and Guidehouse are very excited to speak to all of you today to discuss what we think is going to happen with respect to payments regulation in 2021. I'm joined by my co-moderator today, Alma Angadi from Guidehouse. This is our second webinar together in the span of the last month or so. So we're so thrilled to be co-hosting this with you, Alma. And we're very fortunate to have two wonderful experts in the payments industry who are going to share their perspectives today. First, we have Damier Zandrine, who is Vice President and Deputy General Counsel at Marqeta, which, for those of you who don't know, is really one of the fastest growing payments companies in the world, and has really made some important advances this year that I'm sure Damier will talk about. She leads Marqeta's global product and regulatory legal function, and she advises the senior leadership on payments, legal developments, risks, and opportunities with a focus on card issuing, processing, and program management. And I've had the great fortune of being in the room with Damier as she's provided that wise counsel to senior leadership, and I know she's highly valued at the company. We also have John Wheathorn from TransferWise, which itself has really made a name for itself in the money transfer business and is fast growing as well. John is the appointed AML BSA officer at TransferWise, and he's also the company's financial crime oversight lead for North America. So again, Alma and I are very pleased to have these two special guests on this webcast today, and we look forward to hearing their views. You see in front of you the agenda for today's program. We're going to go over some of the latest developments in the payments industry, and in particular, how the payments industry has been affected by the COVID-19 pandemic. We're going to review some trends in payment regulation that we think are relevant for the industry, and talk about some specific regulatory initiatives, such as the OCC Special Purpose National Bank Charter, the so-called FinTech Charter, as well as the proposed Payments Charter. And we're also going to talk a little bit about the real-time payments initiative that is being pursued by both the private sector as well as the Federal Reserve. So we've got a pretty jam-packed agenda today, and we hope we have a lot of folks who have interest. We are going to make a recording of this available afterwards, but we encourage you to ask questions throughout. We'll check the question bar, and we'll try to answer questions that you may have as the presentation proceeds. I'll probably ask the first question here, but Alma, did you want to say any initial words before we launch into our questions for our special guests?
No, but just want to thank everyone for tuning in. And again, it's so important to hear from the industry folks who are dealing with these issues every day. So I think we're all going to learn a lot. So thank you, Craig.
Absolutely. So we'll kind of dive right into the substance here. And Damier, we were hoping to start with you for the first question. There have obviously been some pretty dramatic changes occurring in the payments industry in recent years, but in particular this year. And we've really seen the very significant adoption of new technologies, such as some of the technologies that your company has put forward during the pandemic, or perhaps an acceleration of certain technologies that were already in the market, but now are out there in a much bigger way. I was hoping you could kind of give us kind of your overview of the landscape of some of those key changes that you're seeing in the industry, and how it's impacting how people use payments in this country and around the world.
Sure. Let me just say good morning and good afternoon wherever you are. And I am a lawyer, so please forgive and indulge me for this disclaimer that my views expressed today are just not mine, and they don't represent Marqeta or any other legal advice. But now that that's out the way, I mean, you're absolutely right, Craig. We've seen a lot of change in the industry. And I would say, just thinking about it, really the biggest is just the, I would say, focus on and proliferation of digital-only financial services. So there's a couple of examples that really come to mind. And I would say the first is just the sheer number of financial technology companies that are either seeking a banking charter or acquiring banks or partnering with banks in some way so they can really enable digital-only financial services. Like there's been a number, reported lately. I think SoFi, Lending Club, Borrow, where there was even a smaller fintech in Minnesota, I think, that just also acquired a bank. So I think that is a big change that we've seen. It's just really the focus on digital-only financial services. A second example, I would say, is the growth of buy now, pay later programs. I mean, those have really taken off, and it's not just, financial technology companies, but even some of the bigger banks are getting into, providing consumers with a way to make a purchase and then typically repay for that purchase, usually over 4 payments. But I mean, just anecdotally, I was doing my Christmas shopping over the weekend online, and there was almost every e-commerce site I went to gave me the option to use a buy now, pay later offering. So I think as we reflect on what's happened in the past 9 months, I mean, before the pandemic, digital, only neobanks were really making a lot of strides. But I think the effect of the pandemic was you saw an acceleration of digital first strategy. And certainly we saw just an explosion of e-commerce transactions. And, for us, payment, those are card not present transactions that, bring their own set of issues as well. So the pandemic just accelerated all of that e-commerce activity. And then the second thing that we saw was not just technology being used to make payments, but now we saw the federal government and states using technology to disperse payments as well. So that was another effect of the pandemic that we saw, where it was, how do we get, with this unprecedented economic environment, how do we get funds dispersed quickly to those who need it the most?
Yeah, I think that's a really interesting insight, particularly the last thing you said about, as there is need to get aid money out to folks and other forms of financial assistance. All levels of government, frankly, really had to pivot and find ways to get money to folks in new ways and in faster ways, especially when you have a situation where people are socially distant and it really doesn't make sense for them to have a check that they have to cash or something like that. That's a really, really interesting thought. So, of course, with all those changes and all those innovations in financial services, there's obviously going to be different compliance considerations that are at play. You have to find ways to mitigate financial crime and fraud. You have to think about consumer protection. You have to think about other sorts of compliance risks. I wonder if you could maybe share a few thoughts on some of the challenges and opportunities you faced as the in-house attorney for a company that's doing a lot of these things.
So I would say, let's talk about what I think is the most obvious thing, which is just the explosion of e-commerce transactions, right? Before the pandemic, card not present transactions had always been those that had been seen to be more risky, because you would have a person with a physical card at a merchant. All of this was happening online, where the physical card isn't present. Well, the network did come out with a standard called 3DS, so secure. I'm sure many people have heard of it. And fortuitously, it came out, I think, probably in the spring of 2019, but I think it is, definitely gaining adoption because that's one way that merchants can shift liability. But the benefit of using 3DS is it really helps with authentication and verifying that those card not present transactions are truly authorized by the proper cardholder. So I think that is one way that to deal with a lot of the fraud with e-commerce transactions, using 3DS really helps to sort of manage that risk of chargebacks. The second thing I would say, which really was a pain point, is again on the dispersing the economic relief payments to consumers. You had the IRS dispersing an economic impact payment, and then you have multiple states dispersing unemployment insurance payments. Sadly, that was definitely exploited by fraudsters throughout a number of states. And I think it was, as an industry and the state having to pivot and send out unemployment insurance at such scale, especially for the first time and having to do it very quickly, that I think was very difficult. And I will say that, it was such a rampant problem with respect to the unemployment insurance fraud that FinCEN actually issued guidance. They just maybe a month ago issued guidance on how to detect and identify red flags, so you can more easily suss out what could be a fraudulent UI payment. But I think that the tools that are available to manage that fraud risk, because we still need to get those payments to people who need them, is things like risk scoring and doing a lot of monitoring and really analyzing sort of account behavior. So one example is if you are getting an unemployment insurance payment from the state of Virginia, but the account holder is a resident in Texas, well, that is one red flag. So really developing type of heuristics around fraud and analysis to help detect on the front end where you may have a fraudulent payment.
That's really interesting perspective, Damier. John, I want to give you a chance to weigh in on these questions. What are some of the key innovations you're seeing that perhaps are different from what Damier pointed out, and also can you talk a little bit about how your company and how the folks you interact with are dealing with some of the new compliance or regulatory challenges posed by those changes?
Yeah, absolutely. And thanks for having me on today, Craig. I think one of the biggest things we're seeing is the move to digital. And the COVID pandemic has definitely accelerated that more than anything. So I know at TransferWise, we're seeing transfer volumes internationally very healthy and growing. And more and more people are seeking digital alternatives. We're talking just in remittances for personal remittances, it's a $700 billion market, $10 trillion in international payments. And when you look at where we were a decade ago, if you look at like the old players like Western Union or MoneyGram, digital was maybe 1% to 2% of their business, and now it's 22-33% of their business is all digital. So I think Damier is absolutely right about we have a lot of issues that come with that, with KYC regulations, with digital verification, and making sure that everyone is who they say they are. And I think there's going to be a lot of scrutiny. The COVID relief payments, lots of fraud going on because the speed and expediency, that was what all of these people were focused on, and making sure that the recipients were who they say they were was not the main focus of all these state unemployment agencies. They just get the money out fast, and then weeks and months later, they're realizing, oh, this didn't quite go the way that we planned it. So I think there's a lot of interesting discussions going on as we go more digital about liability for fraud. There's a phrase that people keep saying, faster payments equals faster fraud. And there's a lot of consumer groups that want financial institutions to have full liability, regardless of who's at fault of whenever fraud occurs on the platform. So there have been a lot of discussions in Europe and the UK about authorized push payment scams, and a lot of the industry there has agreed to a voluntary code of conduct. But there's not really a standard approach in the U.S. to account security from a regulatory perspective in terms of customer authentication and really making sure that we have stronger multi-factor authentication on account access and payment initiation. And if we were to get that, if that was to be moved forward as a priority, we'd see dramatic reductions of fraud and improved account security. But right now, there's kind of a state-by-state approach to regulations. The Fed hasn't really weighed in on the multi-factor approach, and the payment streams are so different in the U.S. Compared to the rest of the world. Things aren't standardized.
That's a good segue, John, into what we're going to talk about next. But I did just want to comment. I do think that UK Finance's big push to educate the consumers to help them avoid, especially push payment fraud, is something we haven't really seen here, which would also, I think, be very useful. But let's talk about our what to some Europeans is kind of a crazy state-by-state licensing and regulatory system if you're not a national bank. I know someone at a conference in London told me that he didn't believe his lawyer when his lawyer said it was easier to do business in the EU than the US, and now he does. So one of the biggest challenges is the 50-state regulation. Again, when you were putting an agent location in a state, it made more sense than in a digital situation. So what are some of the things that you think could happen to improve that? And specifically, what do you think about the group of states that's proposing a unified one exam for the digital payments companies that do business in many states?
I can take that, I guess. I love it. I love multi-state exams when states come together. I know that's a weird thing to say, but it certainly makes our life easier. So I think one of the biggest challenges, particularly in the fintech space, is getting access. And this is something that I think we're going to start hearing more and more about in the coming years, is membership and access. Because in the United States, currently only depository institutions have direct access to the payment systems. And meanwhile, other countries are increasingly modernizing their payment rules to open direct payments to more participants. So in 2018, the UK opened its faster payment system to non-bank private payment companies. TransferWise happened to become the first member, and 5 others have followed. Canada, Singapore, the EU, Australia, they're all following suit. And even the World Bank, like the G20 and BIS, have called for increased access to payment systems because it results in lower costs for consumers, especially on cross-border payments. We do have the FedNow initiative, and I think that's probably on point to launch in 2023, 2024. But when we get those faster things there and we get that access, it makes things a lot easier. In terms of the state-by-state approach, I mean, we have licenses in 48 states. There's one we're still waiting on, but that's where we're working. But right now, some states just say, hey, we're this one state. We want to come in, we want to examine you, we want to look at your books. We're fine, we'll do that. So the idea and this proposal that these states will come together and share the results, it makes us easier because we'd rather give one big presentation than 48 state presentations. It certainly makes the lift a lot easier. And it also gives a lot more uniformity, which is something that we don't have in the United States that you find in the EU. And that's, to your point, Alma, people are like, how could you deal with all these different regulators and different things? But this is also the country where it's all about states' rights and these sovereign states that we have in the United States. And, if one state, gosh darn it, really wants to look at the books and do their own thing, no one can really stop them. But yeah, I'm a big fan. Less exams, the better. So the more people we want to have in that room, I'm happy to have them.
Is there anything else on your wish list for next year that you think would help payments companies do business more easily, but still safely?
Next year, I mean, I don't know what 2021 is going to bring. I can't.
Or the next few years. Good point.
Okay.
Good point.
The next few years, I could probably say. Yeah, I mean, direct payment access. That's a big thing for TransferWise because we're always trying to improve speed. We can compete with big banks on cost, but speed is hard because we need banking partners to do that. I think one of the big concerns in the political arena is the idea of, big tech is going to take over finance, right? So we have all these concerns that big tech's going to come in there. And unfortunately, because there's that fear and that publicized fear that the media picks up on, it kind of clouds the issue around, the payments charter that actually isn't aimed at big tech. It's actually aimed at fintechs and startups and things that can help community banks do things faster and really get more access. I said earlier, digital is like this trend, but we also have to keep in mind cash is always going to be there. And it's around 22%. We have underbanked or unbanked population in the US that still has that access. So the more we can add access, the more we can get more people to the table. I think it's better for everyone. It's better for consumers, better for fintechs, and it's going to make the big banks work harder for it, which I'm always a fan of personally.
Yeah, Alma and Craig, if I could just add on to what John just explained, I would say that a couple of things that he said really resonated. There was the OCC proposal for a payments charter, which essentially would be sort of a national money transmitter license where you would not have state by state regulation, and you would get a national banking charter as a payments institution. And then part two of that proposal would be, as John touched on, would be to give access directly to a Fed account. I don't know if any charters have been granted yet as a payments charter. I don't believe so. And the thing that I think that where we're going to see a lot of tension, especially next year, is the chairwoman, Maxine Waters of the House Financial Services Committee, sent a very lengthy substantive letter to President-elect Biden. And one of the things that she said in that letter was, to reverse this trend of, allowing non-bank fintechs to get a charter. So I think that's definitely something that is going to be on her radar. And so where we have seen progress in this area recently, I'm not as encouraged that we'll continue to see it go the same path. So I think the state by state licensing model may be here for a little bit.
And yeah, I think one of the charters, the OCC charters, it may have been the payments charter, was struck down by a federal judge in New York at the behest of the New York Department of Financial Services in a lawsuit, and is on appeal to the Second Circuit. So they've come out with another sort of modified one, but I agree. I don't think anyone has applied or obtained it yet. Sorry, Craig.
Alma, I think that's exactly right. I think a lot of people are waiting to figure out how that litigation gets resolved. And then on the separate payments charter that the acting comptroller, Brian Brooks, has kind of thrown out there, we don't actually have any real policy behind it yet. We essentially don't have any sort of written policy or any sort of rulemaking or anything like that. So I think we're all kind of waiting with bated breath for some more details surrounding that payments charter, which is kind of an offshoot of the special purpose national bank charter, which really has been around now for several years as a formal OCC policy, but which has not led to any granting of any charters. One other point I would just piggyback on what Damier said. Chairwoman Waters really did release quite the manifesto several days ago with her policy priorities. The other interesting thing I noted from that document, not only did she reiterate her longstanding skepticism towards charters for fintechs, whether it's the OCC charters or whether it's an industrial loan company charter by the FDIC, but she also actually called for the rescission of innovation policies that have been put forward by the CFPB and other agencies, which was a little further, frankly, than than I had expected her to go. So we'll have to see whether the presumed new CFPB director, as well as the presumed new leadership of the other federal regulators, will kind of pull back on some of their innovation policies generally, following Chairwoman Waters' lead, or whether there'll be some real kind of internecine debate among Democrats in particular on these issues. So moving on to a slightly different topic. So one big challenge that sometimes is that regulators don't understand new technology, and they may be overly concerned with risk rather than the mitigants that the technology can actually offer. So Damier, I was hoping you might be able to provide some thoughts, and John too, about what financial institutions should do before an exam to try to educate that exam team about that new technology or that new innovation, as well as what do you see as best practices for educating regulators and even folks in Congress, as we've talked about with Congress's attention on this.
Thanks, Craig. So I would say that, yes, it really starts well before any examination is going to be scheduled. When you are, wanting to go to market with a new product or innovation, there's a real opportunity to educate and demystify technology for regulators and lawmakers, policymakers generally. And I think what's helpful is to start by explaining the problem that you are solving and really giving them an up close, firsthand view of the technology. And it could even be having them preview the UI, offering it to them as beta testers, essentially, because I think that a lot of it is just not understanding and making assumptions, because there are things that may happen anecdotally where something goes wrong, and that snapshot then paints their view for the long term. But I think if you empower them by putting the technology in their hands and say, look, we're going to release an alpha or a beta version, and we want you to be a tester so you can see firsthand, I think that really helps. And so, we were just talking about the pandemic, and one thing that illuminated was, if you are an unbanked consumer, you don't have a card, you don't have a bank account, you're going to have serious financial obstacles when everything is digital, because there's no cash being used. So if you have, a new digital bank account or mobile wallet that you are making available to give greater financial tools and access, that's a real problem that you are solving in a very real crisis. And to say, you might, if the regulator has a problem about lax AML or KYC concerns, let them use your product so they can see the information you are collecting and how you are verifying it and how you're monitoring, and they can see that firsthand to sort of dispel any fears. And, I'll give just a personal experience as well. Like, at a prior employer, I was asked to really understand and develop a point of view for the company around crypto assets, cryptocurrency, because it was still very much misunderstood. But it was, look, a lot of people are interested in this. We need to be in a position where we are knowledgeable about it. Will you take the lead to support this? And so in doing that, actually, the first thing I did was I opened up a cryptocurrency account. I actually purchased, I think it was Litecoin, and I thought, what am I doing? But it was really illuminating for me because I had that personal experience, and so I could be definitely more conversant in talking about crypto assets. I understood firsthand what they collected and was able to really dispel these rumors that, oh, it's only for people who are doing bad, illicit things. And I saw, they linked my underlying bank account. I saw how long it actually took to send me through the KYC process before I could start transacting, and the step-up authentication. So, that was just one thing that I did to become much more knowledgeable about a place where I had no previous competence, quite frankly. And so I think that when you are putting a new product out there, a new innovation, and we all know technology moves so fast, you really have to do your part to bring regulators along and help tell your story and help them understand what you want to do.
You know, that it's so funny you mentioned that. I've done, you know, a fair amount of lobbying for you know, financial services companies over the past decade, and I remember I was actually helping one client in the prepaid card space write their comment letter for the big CFPB prepaid account rule a few years ago. And the first thing I did before I wrote the comment letter was to go to a convenience store and pick up a general purpose reloadable card and actually buy it and figure out how the typical consumer uses that card. And then in turn, you know, when I'd be on Capitol Hill or meeting with regulators, you know, we would actually bring, you know, in this case, we had the luxury of a physical product rather than a digital product, but I would actually bring that card, show the disclosures associated with it, show, you know, how a customer interacts with it in the retail environment or in whatever environment they're in. So I think that's a really good practice that you identified, Damier. John, would you like to weigh in on this question?
Yeah, I love that, Damier. I love that you're like, I'm just going to buy some Litecoin. Let's see what this is about. I think I own some Dogecoin in some wallet that I've lost the address to several years ago. That has no value. Don't worry. And I will not find my wallet key, I'm sure. Yeah, I think it's interesting. There is getting that regulator understanding. And also, you know, when we look at policy, getting that political understanding of what you're trying to do can be really, really hard. And to Craig's earlier point, I mean, when you talk about we had the letter recently and this high level of distrust of fintechs, I mean, it's not unwarranted. That's what I will say. So there have been some high profile service outages at Chime and Robinhood, and banks use those outages to hammer fintechs, and so do consumer advocates. And I remember Robinhood recently got negative press attention when customers just lost a bunch of money, it disappeared, and they couldn't find a phone number to call. Right. So from a consumer advocacy point, it's easy to always fall back on. It's like, well, banks, we know the regulations, we understand the product. There's phone numbers, there's physical locations, we know what's going on. It's much harder to understand fintechs that are trying to do things in a new way, whether that's crypto, whether that's a new payment structure, or ever you have it set up. So at TransferWise, I think we really, whenever we're meeting with regulators, there is always an educational component of how we set up things. And we are a money services business. That is what our license is. And so every regulator that comes in for the first time, they're always like, okay, we need to see, you know, the cash deposit slips, and we need to talk to, you know, interview a teller. I'm like, well, we don't have tellers and we don't do cash. And they're like, well, how are you an MSP? And we're like, well, let's explain how our model works. And there's really the importance of getting that education and just explaining how our product works and how we're able to enable things so that people can send international payments, and how we rely on our banking partners in the U.S. For the transferring of money, and how it moves, basically how your payment flow moves. Every fintech that starts up, they're always trying to say, what's the value that we add? And that's the key, is that not all fintechs are the same. You know, a crypto wallet provider is completely different than someone else that is like PayPal's interaction with crypto. It's a completely different model. But you might just hear crypto, oh, you know, Gemini and PayPal are the same, right? They both do crypto. Completely different models, completely different how they have them set up. So that's where it becomes education. The problem is when you get those opportunities to sit in front of regulators and the time to educate them on what it is, when there's 50 other fintechs they need to examine, and they're not, you know, they don't have the time to keep up with that. You don't have the personnel to do that. So I think that's one of the challenges we all face, is getting that knowledge out there, not just to the regulators, but also on the policy side, so people understand the problems that fintechs are solving or trying to solve.
Yeah, I think that's great, John. And sort of to a related point, I've been talking to one of the blockchain tracing companies who's considering doing some pretty significant training for regulators globally on crypto, because that's a perfect example. There's, you know, $200 billion in criminal proceeds laundered through crypto. There's $2 trillion in fiat. And while lots of bad things happen with all kinds of things of value, it's like you have a GPS chip on a dollar bill that a drug dealer's passing. So there are mitigants, and I think it's a great idea to educate them on, again, what problem, as you say, trying to solve, and how we are doing it safely, and why some things will be riskier, but some things won't be quite as risky. Just the amounts involved in money transmission tend to be much less. You're not going to have typically $20 million payments. And so that's a mitigant, things like that. So along those lines, another challenge that I've seen with a lot of my fintech clients is that they really think of themselves as technology companies, and they don't really necessarily, especially at the early stages, understand that they're financial institutions. So how do you educate your own business people about the risks and the regulations that they have to, like, they can have a really cool product, but here's why everybody will be worried about it?
You know, that's a really great question, because there's so many fintechs that see themselves as, we're a technology company, and they don't think, I'm a financial institution and I'm regulated in the same way a bank is, or an MSB is, or how Western Union is. So I think one of the challenges of all fintechs is really in how you hire and how you grow. When you're small and you're in your garage and you've got 5 people, you're not going to attract a lot of regulatory attention. So TransferWise, we've been around for a while now, over a decade, and we're moving over $5 billion a month. We get lots of regulatory attention. So what's enabled us to succeed is there's always a danger, because fintechs say, well, we want to grow talent in-house. And, we'll just promote this person to run this and this person to run that. But you need to balance growth with hiring key personnel that have subject matter expertise that can help guide and scale your company as it gets larger. And that's where you oftentimes need to get expert opinions, because you might not know who you need to hire. You might need to hire a consulting firm to come in and say, hey, listen, our regulators are asking questions and we don't even know what they're talking about. Let's do a staffing needs assessment. Let's see who we need. And maybe you need an expert on fraud that can build fraud and consumer protections. Maybe you need a regulatory compliance specialist that can make sure that you understand what Reg E is and you're handling disputes correctly. And maybe you need to have a dedicated BSA officer. You're of an appropriate size to handle your financial crime needs. But you need to make sure that if you're a fintech, you are know what you know and know what you don't know. And if the things you don't know, you need to hire the right people that can help you scale, because you ignore compliance at your own peril. And everyone should be telling your clients this if you're in the consulting side. If you ignore these things, you're going to run into problems. I won't say who it was, because I don't like throwing people under the bus. There was a UK company a while back, and they had a lot of volume in their sanctions screening. And they said, wow, this is a lot of volume. We don't have enough staff to deal with this. And so the senior leader said, well, let's just stop screening things for a while until we catch up with the screening, and we'll just turn that off. And that didn't turn out well for them. You can't just stop your controls in financial crime. And whether that was a compliance culture issue or not having the expertise in the company to know that you can't do that, it leads to very expensive problems that affect not only fines and regulatory action, but your brand and the reputation that you have. So have to make those investments, have to hire key personnel, and get advice. Like, don't be afraid. If you're doing well, go out, get some opinions. There's a lot of people that are happy to help your fintech grow, and you'll grow smarter and scalable. You can have the best product in the world, but if you neglect compliance, you won't have a company.
Yeah, if I could just really echo what John just explained. So Marqeta is not a regulated entity. We are a financial technology company, and we provide the technology and processing, but we also provide program management services as well. So that means we partner with financial institutions. And so in doing so, we take that partnership very seriously, because the bank partnerships are integral to being able to deliver the product that we offer. And so though we are not regulated, I just finished my annual AML compliance training that we do for the entire company. We do have a chief compliance officer and a BSA officer. And I think as you talk about being able to scale, and especially as you talk about being able to expand your business globally, and another country may have a very different view of your activity than the view taken in the US. So I think that it's really very smart to be looking at things on the front end. And though you may not be squarely under the coverage of the regs, to still have a culture of compliance and do what you need to do to be able to advance your business and not come to an abrupt halt like another company that imploded very famously across the pond, so who had money missing overnight. So I really agree with what you say, John. That's really smart advice.
You know, Dummy, I love that you guys provide that training too, because I think sometimes from a regulatory perspective, we talk about all these entities need to have board training, but I'm always telling people go beyond the required check the box board training and make sure people really understand who's on the line for these things. And I'm sure you've dealt with that with your clients as well, just getting that. Because I find that mostly senior leaders, once they understand the importance of it, they say, okay, who do we need to hire? So that we don't have to worry about this and keep us up at night.
Well, just one thing to add to that, guys. One of the other things I think a lot of startups have to worry about is if, you know, we've all seen some of the biggest banks in the world have very big financial penalties. They're still fine, right? But if you are a startup and you have a, especially if it's a real money laundering or sanctions problem, you lose your financing. You don't have that kind of capital to pay some of the fines that are happening. So it really can be existential for a smaller company or a startup.
You know, that's a great point, Alma. And sometimes it's not even a fine. Sometimes it's just the risk that you present to your partners, which is crucial for fintechs. It's so TransferWise, we have partners all around the world. If we have problems with our compliance program, we might be outside their risk appetite, and suddenly we've lost a partner, and one of our products doesn't work anymore. So it's really important, even if you don't get to the point of having regulatory problems. Even if you have a lot of fraud on your platform, you're running a marketplace that you don't have enough controls on it, you're going to find that you're alone very quickly and not sustainable as well.
This kind of reminds me of a lot of discussion I've heard about the food industry during the pandemic. A lot of people have noticed that, you know, companies like Domino's Pizza and Papa John's have done very well during the pandemic because what they actually are technology companies that happen to deliver pizza, and so they figured out the right way to do this while everyone else has scrambled. And you know, I think you do have a situation where some fintechs are kind of technology companies that are learning financial services on the fly and all of the regulatory obligations that come along with it. So I think you all have laid out some really interesting perspective on how you help your companies and how others are helping their companies mature in dealing with their regulatory obligations. I'm going to switch topics a little bit here, and I wanted to ask a little bit about faster payments and real-time payments. As you know, the big banks through the clearinghouse have developed a real-time payments system to ensure faster settlement and clearing of payments that is being rolled out on a pretty gradual basis, I would say. At the same time, the Federal Reserve announced last year that it's developing its own real-time payment system that will be unveiled in the next 2 or 3 years. I'm curious to hear from both of you, and Damier, maybe we'll start with you. How important are these initiatives to ensure faster payments and indeed even real-time payments? How important is that to your business, and what are some perspectives you have on these initiatives as they move forward?
Sure. So, when I think about using technology to increase the speed of payments, I mean, generally that's a win all around, in my view. The part where I get a little concerned is that, it seems like we could be fostering inefficiencies by having a number of competing systems. So you mentioned there is the real-time payment system that a lot of the big banks work to stand up. And now we have the proposed Fed solution that's coming in another couple of years. We also have same-day ACH. And I think that NACHA just announced maybe yesterday or the day before a rule to increase the limits for same-day ACH payment. And then we have a number of P2P and wallet solutions that are offered to get expedited payments for consumers. So, it just feels like we're going to end up with sort of a patchwork of systems that, may support different use cases, have different requirements, different limits, and they don't have any real common standards or interoperability. So that's sort of my concern, which is always going back to what is the problem we're trying to solve? And is this something where we need to get money to consumers faster or move money around the world faster? Are we talking about business payments? And each of those systems seems to be tackling one use case or another. So my hope is that as we continue to iterate and evolve faster payments, we get to some type of harmonization. And I think looking to our friends in the UK and Europe, though we're on the precipice of Brexit, that may not be the best example, but they've had faster payments for a while. And I know that it's the EEA, the European Economic Area, it is smaller with less financial institutions, generally speaking. But I do worry that our payment system in the US is already very fragmented. And with having all of these faster payment systems stood up, someone needs to figure out, okay, how do we make sure they can talk to each other? Or how do we drive ubiquity and ease of use across the board? And I don't see that happening so much.
John, do you have some thoughts on that question?
Yes. As I said earlier, faster is always better at TransferWise. We're always trying to compete on price and speed. Those are the two big things that we work on. I think in the big picture, FedNow should still be full steam ahead from the Fed and the launch in 2023 or 2024. And in fact, I think you could argue there might be increased support now for its potential to help low-income communities because Democrats are typically going to side with community banks over the big banks every time. I think there's two issues I think that comes from these faster payment schemes. One that I already mentioned was the fraud one. But I think here's where there's an opportunity with the Federal Reserve because they're building their own system. So in terms of standardization, they could really use this to require a standard approach to account security. And this is where we've seen regulators in Europe require secure customer authentication with the recent Second Payment Services Directive legislation, which the industry agrees has helped make accounts and customer funds more secure and also standardizes the flow of funds for customers, making them less confusing. So how that would work, though, and getting that aligned with the other existing payment systems remains to be seen. I think there needs to be a lot of involvement from the industry to make that happen. I really am a big fan of the stronger multi-factor customer authentication. When we look at ACH and NACHA and the fraud rates in that compared to the payment systems in Europe, there's a lot more fraud on the ACH side globally, just because of the lack of controls, standardization of controls that has to be done of customers. So I think those are kind of the big challenges that we're going to see. But I don't have the solution. I don't have the all-in-one solution that's going to get all the disparate systems to work together. I think it's an ongoing challenge. But hopefully, on the policy side, people will see that there is value in this and that just because something's a fintech doesn't mean Facebook owns your bank now and is off in the Wild West. There's a lot of utility and things that are in there that can help people access their money for a lower cost, which is often where fintechs shine, is that we're able to cut the cost compared to the big banks.
Yeah, that is definitely true. So in our remaining moments, we noticed we got a few audience questions. some good questions from our audience. We really appreciate that. And I think, John, we'll direct this first question to you, since it looks like it's somewhat geared towards TransferWise, although Damier may have some thoughts as well. So the first question we got is, are the themes within C2C payments, such as TransferWise, the same as B2C payments, i.e. merchant and consumer involved payments, or are we seeing distinct differences or drivers of disruption and innovation? John, do you have some thoughts on that question?
So just to make sure, because we all live in worlds of acronyms, I think we mean consumer to consumer and business to consumer.
Yeah, I think we're talking about consumer and business to consumer.
Just in terms of the trends that we're seeing?
I think so. I think that's what the question is getting at. Are we seeing kind of the same trends in the consumer to consumer products as the business to consumer, or are we seeing kind of different trends in those two segments of the industry? That's what I think the question is getting at.
Oh, okay, gotcha. So that makes a little bit more sense. So I think when we talk about remittances, so I'll talk about that briefly. So we're talking about like consumer to consumer. The remittances is a $700 billion market globally. And about 10% of those originate from the US each year. And that's in large part because the foreign-born population in the US is around 15% of the total population of the US and around 17% of the workforce in the US. But those numbers are only for traditional remittances sent to family and friends. When you factor in the broader consumer, small business, international payments, you're looking at a much larger segment of orders by magnitude. So we think of cross-border tuition payments, vacationers paying for lodging, people buying property abroad, small businesses managing payroll, buying goods, services. We estimate people and small to medium businesses transfer around $10 trillion internationally. So at TransferWise, we include small businesses in this market size, not only because they're a customer base, but also because small businesses often conduct international payments in a manner more similar to consumers than large corporations, because they don't have a lot that, small businesses don't have FX teams and negotiating power. So they often just send their money through banks or PayPal and just eat the fees. So I think there's a lot of it. In terms of the growth, at TransferWise, we've seen consistent growth. Every month right now, we have around 10,000 small businesses signing up with TransferWise. That's huge growth. And our year-over-year growth on the business side is it's shocking sometimes, because it's so funny to me. In Europe, everyone knows who TransferWise is. I come to the US, consumers are like, TransferWise? I don't know what that is. I have PayPal, I have Cash App. I don't know what you guys are. But the business side, we're making these huge things. The other thing we're seeing too is the increased use of API integrations. And this is where there's a lot of growth of fintechs. So at TransferWise, we provide direct API integrations with banks and businesses where the customers are kind of like powered by TransferWise directly on their platforms, so that they don't come directly to us. They might not even know necessarily that they're our customers, but their small bank, their community bank wants to save money on international business payments that they used to have to go to a large bank. They now partner with us. They save money. Their consumers save money. So yeah, there's a lot of growth there, particularly on the business market and the small to medium size. And that market is a lot larger than people think. And it continues to grow as people are looking for better and faster solutions than they're going to traditionally get. And it's really hard. If you're a small business, a medium-sized business, you want to make international payments, it can be very expensive on the traditional payment rails.
Yeah, so Craig, I'll just maybe also just answer that from the domestic side of things. So Marqeta also, has a robust set of APIs where we do API integration to help our customers make the payments. And what we are seeing on a B2C side is we definitely see where businesses need to disperse payments to consumers. And one just example, sadly, I live in California and we had a lot of fires. And so you have a lot of insurance companies who need to disperse quickly disaster relief payments, insurance payments. And so what we're seeing is the ability to disperse those payments through what's called an OCT transaction. So essentially it is getting a payment sent to a consumer's debit card so that they have those funds available pretty quickly, as opposed to having to wait for a check in the mail or having the consumer give the business their bank account number to send an ACH. So I would say that is one trend that we're seeing and helping to solve for, is to be able to deliver a B2C payment much faster through the card bill.
So another audience question we got is actually the subject of the last webinar that Alma and I did last month, and it actually harkens back a little bit to what Damier was saying about making sure that the regulators, have an understanding of a product or service as you're bringing it to market. The question is, what are your views as to using regulatory sandboxes that are now being offered by the CFPB and others? Either Damier or John, would you like to tackle that one?
So, I mean, I don't have personal experience with the regulatory sandbox. I know that other companies have it, and quite frankly, I'm not certain how successful it's been. I think a regulatory sandbox that will give you I guess, enough flexibility to innovate like you need to without fear of like full enforcement, I would say would be useful to give the company, some learnings without, having a threat of a fine. I also think, going back to the comment that I made previously, that if being in a regulatory sandbox means that you have the opportunity to give the technology directly to the regulator to be an early tester, I think that can only help.
Yeah, I would say we haven't really played too much in the sandboxes, the regulatory sandboxes of TransferWise, so I don't have any personal firsthand experience with them, but it all sounds like a good idea. Anytime that you can encourage more innovation, and the regulators allow for that, it's always going to be a good thing.
Yeah, so when Alma and I had the great opportunity to actually interview the director of the CFPB's Office of Innovation in our webinar last month, I don't think it'll come as a surprise to hear that neither of your companies have availed yourselves of those policies that the CFPB is putting forward. But they are really ramping up use of sandboxes, use of their trial disclosure program, use of their no action letter program. These are all CFPB policies that have been put in place, and they're doing not only dealing with innovative products, but they're actually doing some innovative things to implement these sandboxes. And again, as I mentioned earlier, I was pretty surprised when Chairwoman Waters called for the outright rescission of each of those three major CFPB innovation policies, because I think there's some really interesting things happening there. And I think there's going to be some other interesting things emanating from the CFPB Office of Innovation, as well as the other regulator offices of innovation. Alma, did you want to add anything to that?
Just had to get off of mute. I do think some of these innovation policies and sandbox policies, once people start using them more and the word gets out that there's trust on both sides, I think it will probably move forward more than it has. I do think there's a little bit of hesitancy. Having been a regulator for most of my career, they don't always believe you. And so sometimes you have to wait till there's a little bit of proof before there's more adoption. But I did think that they're doing some amazing things there. Something as simple as the no action letter is a agency-wide no action letter, not just specific to one part of the Bureau. Things like that, I think, could go a long way. So hopefully there'll be some experimentation with that.
Yeah, and I think a key part of this will be, coordination, international coordination with state regulators. Several states have enacted their own sandbox laws or are doing it from a regulatory basis. The CFPB is part of this global consumer financial network, so they're trying to focus on international coordination as well, which, you know, for I know two companies like yours who are increasingly operating on an international basis, you know, that'll be something to take a look at. And then, you know, so some of the other ways they're offering them, not just to the individual companies themselves seeking you know, to participate in a sandbox, but also offering them to trade associations and service providers via a template that all of their customers or all of their members can use. I think those are some interesting applications of financial innovation policy that could you know, really you know, accelerate and make those policies more attractive to a broader range of companies. I see that we have reached the end of our appointed time here. And John and Damier, I think I can speak on behalf of Alma in saying how grateful we are for hearing your great perspectives. We have the great pleasure of knowing you outside of this webinar, and we always enjoy hearing your perspectives. But I know the folks on this webinar have enjoyed hearing what you have to say as well. Does anyone else want to say anything in closing, or should we wrap up?
Just thank you all for paying attention, and thank you, Damier and John, for joining us. It was a real treat.
Thank you for having us, and we really appreciate. We know people are suffering from Zoom fatigue, so thank you for giving us some of your time. Yes.
Yeah, thank you for having us.
Thank you guys again. So I'll just note a recording of this will be made available and shared with those who registered. So we'll be getting that out to you. If you can't have enough of us and want to hear us again, you can listen to that recording. Again, we just want to thank everyone for joining. We hope you stay safe and have a happy holiday season. Thanks so much.
Thank you.